G'day everyone, welcome back to Pete's Investing. Today is June the 2nd, 2023. This is the high grade copper chart analysis. I've got the weekly showing primarily a bearish signal, and the daily is broken up into a neutral, and the hourly is showing a bit more bullish movement. So let's look at each of these in detail. Again, we're looking at the triple moving average of the price chart compared to the CCI 150 moving averages, and they're aligned and showing a bearish signal. Also note, we did draw this Fibonacci back here, and you can see this price bounced down from the 61%, which is our key area of Fibonacci potential reversal. And if it had gone up beyond that, generally it means a change of direction. But here it's confirmed the downtrend and bounced that through that on the weekly. On the daily, again looking at more closely, we've got these key diagonal lines, and it's broken through those levels in the past few days or weeks. And it's currently bounced off this last ascending line which we drew some time ago. And if I zoom out, you can see there those lines drawn along those bottoms as well as those tops. We've also got these key support at 32,400 and resistance here at 43,568. Now it's actually, as I said, bounced off that key area, that diagonal, and it's broken up into a neutral positioning, so we may see more bullish movement in the coming days. So looking at the hourly, we did draw this this bullish divergence on the CCI versus the bearish divergence on the price chart, and we did draw this little channel based on that divergence area, and we did suggest that once it breaks above that channel, which it did there, our initial target area would have been somewhere between the 38% to the 61% Fibonacci retracement between that high and that low. We just take it to the recent high, and it actually has hit that first within that box, so it's hit that little target area, and now it could go higher. There's no sign of a resistance yet, and as soon as that appears, we'll let you know. But we're looking at further upside, and again, as I said, if it breaks above the 61%, we may see further upside again. But at the moment, it's hit that initial target on that divergence reversal. Also up here, I've got these two back tests. There's a long program, the blue, this blue line, this blue chart here, and the red one is a bearish program back test. So you can see there, as the price goes up, our profitability goes up, and as the price declines, our profitability on the bearish program also goes up. And where these steps, multiple entries are made, and that's where we use the average down approach. And again, we don't use stop losses. We only trade in the direction of the major trends, and on looking at the hourly, we only take trends in the direction of the weekly and daily trends primarily. So you can see there in the last few weeks there was predominantly a bearish trend. Likewise on the daily there was bearish momentum as well. So you would have taken primarily bearish trades during that period there. You can see there on the right, that was a bit more closely, that was in that area there where the price was moving, the profitability was moving up in alignment with that price also declining. So to understand how to trade this and other trading strategies, reference the links in the description below. Support us on the Patreon page, where we also take on any requests and answer your questions. We also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.